Hello, I'm Naina Sabarwal Batra. Welcome to Money Meets Mission, a podcast brought to you by AVPN, the largest social investing community in Asia. I'm excited to host leaders from across the business, philanthropy, and impact investing worlds to share stories of how they are putting their resources to work, tackling some of the largest and most complex social and environmental issues facing Asia today.
The key question is this an opportunity for green finance?
Climate risk is in parallel or almost equivalent to what we're seeing in the pandemic in terms of shock.
In a blended finance solution, technical assistance, it's very important actually when it comes to green lending.
In this episode, moderated by Yasef Zahar, Climate Finance Advisor at the Stockholm Environment Institute, today's discussion will unpack how climate financing can be a catalyst to turn a weakening economy around and what it takes for investors and businesses to commit to climate action. Leading practitioners, including Pushkala Lakshmiratan, who is the Asia Climate Finance Lead at the International Finance Corporation, Peiyuan Guo, Chairman of Sintao Green Finance, a Chinese consultancy promoting sustainable finance and providing ESG data and analytics, and Maud Savari-Mornay, Asia Pacific Director at Responsibility, one of the most active climate impact funds in the region, will bring in their perspectives from various sectors.
Hello, everybody. Just as an intro, this session will discuss innovative solutions to attract new private sector players. More funds from institutional investors need to find a way to the region to support the transition to low carbon, climate resilience. Philanthropy and dedicated funds can take the lead, and I really hope that this will be an outcome of this session. But the way it is now, climate finance does not yet reach the vulnerable communities in the region, in Asia Pacific, adaptation and resilience programs, which are very much so important for the whole agenda of climate. So yes, infrastructure projects are being financed with green bonds, and the involvement of the sector has been very important over the last 2-3 years. But how do we actually channel those funds also to those pockets where it's needed most, in fact? Is blended finance the silver bullet in a way? What are the associated challenges? Why it is so difficult for private sector to access these areas? We will discuss all of that, perhaps the role of carbon finance in the region, which is coming kind of back again. What is needed to enable this? And we have, of course, to touch the current crisis. We're not living in a bubble, and something drastic has happened, and we need to understand how does that affect our market, how does that affect green finance, and I will perhaps start with this topic. We are at uncertain times, COVID crisis. Everybody's talking about stimulant packages. It's a transformational shift in leadership thinking. The key question is this an opportunity for green finance? And I would like to first refer the question to Pushkala. What is the role and the response for COVID, and how could you actually bring together a private sector to join you on that response?
Thank you very much, Yossi. And thank you to AVPN as well for inviting IFC and me today to the panel. No, I think it's a very relevant question given what's happening here, as we talked about in your introduction as well. I think this is an enormous opportunity in a way to rethink a lot of the investments that are going into climate. And we have seen this now in the last couple of months from the IFC side. So just to put it in perspective, in terms of the market itself, I think a lot of people are starting to realize that climate risk is in parallel or almost equivalent to what we're seeing in the pandemic in terms of shock. And physical and transition risks around climate have been an important topic, but are probably, gaining a lot more prominence now with people just seeing how this affects economies and markets and companies as well. So there is a change in sentiment, I would think. But of course, a lot of this has to be top down with policy and regulation coming in and ensuring that the investments or climate investments are heading in the right direction during the recovery period. And there's a lot more focus, I think, as we're starting to see in terms of sustainable infrastructure and high quality infrastructure as we move into the recovery phase. From the IFC side, we have the World Bank Group and IFC. We've put together a COVID response facility for a number of our clients as well, which is a pretty large facility directed towards liquidity concerns that a number of our clients are facing. And the response has been enormous. And going forward, in terms of long-term funding, it's going to be more important than ever before, I think, for climate. And this is a huge opportunity, as I said, as a group, to come together on the private sector side, but also on the policy and regulation side as well.
Thank you very much. Pushkala, can I ask you a follow-up question? How do you see in developing Asia, where the priorities are food security and jobs, can governments actually prioritize green as a response for COVID? I mean, or sustainability? Could this actually go hand in hand?
Absolutely, Yossi, and that's a perfect question because we get that asked a lot pre-COVID and now even during COVID. And I think, we have done a little bit of an analysis internally as well, and we find that there are so many renewable energy sectors, energy efficiency sectors, and jobs that are related to that, which are probably going to come to the fore more than any of the traditional power generation of sectors or industries that we see. So I think it's a huge opportunity, not only from climate in the sustainability perspective, but also in terms of the economic impacts of what would come about because of increased climate lending and investments. And definitely job creation, definitely stability around those, food security and growth are all factors that we're starting to see will be positively affected by this change in climate investments.
And I think the kind of the leadership change in thinking can provide that. I'd like to refer the same question to Maud. And Maud, I know that responsibility, of course, is very much in the region, working with financial institutions, bringing impact funds. Could you maybe describe the recent response for the COVID? And I know that you've been part of a consortium of few impact funds together.
Yes, thank you so much for giving me the floor. There are currently several responses, right, which are linked to the COVID-19 crisis. I think generally the climate topic, was already very important, will become even more important in the future, as also a response to the COVID crisis. And one of the initiatives that Responsibility is coordinating closely with several partners, donors, foundations, includes to support companies that are currently facing a liquidity crisis and reinforce the market foundation. So it includes actually several dimension, and maybe I start not really with the financing, but with the technical assistance, because it's clearly the crisis also demonstrates the need for organizational support, and it can translate into some technical assistance, and it can take many dimensions, right? It can be, as mentioned before, liquidity planning, but it could be as well business modeling. It could be anything ranging from the investor relation to, for example, credit risk management. And it's actually key for a sector which is still relatively nascent. Obviously, it includes as well financial assistance and liquidity support. And important point, it's an activity which is led with other partners, so it's really a sector response.
Yeah, that's very interesting that the impact funds industry comes and actually provides a kind of a combined response rather than a single fund approach, which could actually bring about a difference here, and also, of course, I suppose with regards to allowing flexibility with payments. It brings away the competition and pressure from stakeholders. So thank you very much for that, Maud. I'd like to ask Dr. Yan if you can elaborate on which ways that green finance is in fact promoted in China, either through the banking sector or otherwise green bonds. So please go ahead.
Thanks, Yossi. My name is Pei Yuan. I am based in Beijing, and I'm the chairman of Centaur Green Finance, and we provide ESG data that cover Chinese Asia. And we also provide green bond verification. We are the CBRI verified partner in China. For the COVID-19, I think right now I'm based in Beijing, and the situation here, it's getting much better now. During this sustainable recovery, we should encourage green investment, which means that we invest in some renewable energy, green infrastructure like high-speed trade, etc. And second is to take care of the environmental and social risk in other typical investment projects, like the typical infrastructure projects. And these are the discussion right now in China on sustainable recovery. Another point about green finance. I have been working on this field for over 15 years. So right now, when talking about green finance, people talk about ESG, green bond, etc. And actually, 10 years ago, in China, people talk about green credit, which means that banks, particularly the commercial banks, should consider the environment and social risk when they lend their money to the clients. And green credit policy actually started in China from 2007 and 2008. And then it became a guideline in 2012, also with the support of IFC. So thanks, IFC. And this actually played a major role because even now, the banking sector actually represents around 70% of the corporate financing in China. So you can see the importance of green credit in China. And also, I think it's actually built a very great fundamental base for green finance development in the past few years. So after Chinese regulator released the green credit guideline in 2012, the next question at the time we were discussing is to do the statistic. And therefore, we have to have the standard and the category. And that's what we call the taxonomy issues. And of course, after 2014, we can see that the green finance has been expanded from the banking sector to green bond market to ESG. So right now, I can see that we have a very promising development here in China. And we will expect more development in the next few years.
I think it's very important to realize the background and how the green finance in China has actually evolved to what it is now. I'd like to ask Pushkala with regards to structures and putting together innovative structures for green finance in the region. Maybe you can describe examples of innovative ideas or structures that recently has been put together. What are the challenges and how can you actually pull in the private sector finance to join on that?
I guess there's a couple of different ways that I'd like to address that question. I think firstly, I work a lot with financial institutions, and in every country, every banking sector and every private sector player is quite different. Early on when we started out with climate finance, a lot of what we were seeing was around risk share facilities, where we would do, say, first loss structures. And this was also interesting in terms of, especially China, where we had a huge program for energy efficiency. And it helped kind of kickstart the entire climate financing area in a very, very big way. And we're similarly starting to see across Asia as well, be it green bonds, green loans, RSF, or even as I mentioned earlier, it could be working capital facilities or trade. As long as the use of proceeds goes towards green, we would be very interested to kind of take that further. And that's how we've been working on structures as well. So where it makes sense to do trade, where it makes sense to do, say, a green bond instrument or an RSF, different countries are different in this region. We've also done subsequently green bonds in Indonesia, but I think the one in Thailand was very unique as well, which was an SME green bond. So some part of the proceeds went towards SME and some part went towards green. And I think that was one of the areas that we're trying to see how we can crowd in a lot more private sector investors or private investors is in the area of SME financing. So not only climate, but also there are a large pool of smaller projects or smaller investors or smaller companies that form a very large part of critical mass of what we have in Asia. So I think there's still a lot to be done. We have still a number of markets in this region where we haven't done any green bonds, for instance. And it also, I think, stems to the fact that there needs to be a capital market side development as well. And so we do a lot also on that aspect in terms of developing capital markets and then bring in the kind of the green or climate finance angle. And it's not only pioneering in terms of financial products, it's also in terms of climate assets. I think that's important to mention as well. So a lot of what we've seen, as you can imagine, is renewable energy, which is, I think, in line with what we saw in terms of policy and regulation, and kind of the market followed that because it made sense. And now it's become a very mature area for climate finance. And we want to be able to see the other areas also come up to the same level. So energy efficiency, climate smart agriculture, green buildings and green housing. So there are a number of other asset categories as well that we are trying to develop. And it's not only, I would say, on the financial product side.
Dr. Paiwan and Pushkala touched on a common thread here, the need to develop the still nascent climate finance ecosystem in Asia so that the market is primed for private sector capital. Ensuring that the policy environment is built for innovation, risk-taking and accountability, a critical foundational step before serious funds come in. Maud from Responsibility now brings us through the next step. How do fund managers like herself bring institutional investors from Europe, for instance, into Asia and into climate finance?
So as an asset manager, we manage funds, and basically we have two specific funds related to climate finance. One is actually celebrating 10 years, and it's about energy efficiency, and it's about deploying finance through banks and large microfinance institutions that would allow to finance energy efficient product and reduce eventually CO2 emission. And so far, it's a fund which has financed more than 75,000 projects through 40 institutions across 25 countries. And it's 10 years, so you could say it's not new, but I think it was quite innovative when given that it was one of the first fund structured in tranches, allowing as well a cushion for private investors. And it was started by the German Ministry of the Environment and KfW, but others joined, including IFC. Thank you, IFC. So the structure from an investor perspective, it's blended finance, so you have different tranches, junior, mezzanine, senior, etc. And it caters for the need of different investors. Typically, the junior tranche, it's for the initiators and sponsor of the project, it's a catalytic part of the fund. And then the more you move up to the structure, you will find DFI and then private investors at the top of the waterfall. And what does it finance? It's long-term financing, senior or subordinated debt for banks or partner microfinance institutions or financial institutions that commit to finance projects that will reduce CO2. So it's mostly energy efficiency. And very important, and I think sometimes it's not mentioned enough in blended finance solution, technical assistance. It's very important actually when it comes to green lending. Simply because the stages of development and understanding on solutions may really be very different from country to country. And that's where technical assistance is very important to support the financial institutions in this journey. It can be used, for example, to help them identify projects they have already in their portfolio and it could be actually developed because they contribute already to CO2 reduction, but it can also help them to do market assessment to identify potentialities. And I could give you example if you want, taken from our portfolio, but typically if you look, it really ranges from, let's say, financing energy efficiency projects in the ready garment sector in Bangladesh, to hybrid car in Sri Lanka, to tuk-tuk, energy efficient tuk-tuk in Cambodia. If you have been there, you know that most of the transportation actually is done by vehicles which are relatively polluting, and the number of vehicles is increasing as well. And one of the areas that was identified by one of our partner, which is actually a large microfinance institution, is that there are energy efficient solutions when it comes to tuk-tuk, but there was a lot of work done on the technical assistance side, first to assess really the business case, right? Because it must be a win-win situation, right, for the institution, but also for the client, and we must be sure as well that it reduces effectively CO2. So to time, baseline studies, etc. But eventually we found out that it was very, efficient on the energy saving side, but also for the client, leading to significant fuel costs. So that's one way of engaging into climate finance. The other way we do have, it's a more recent initiative. Actually, it's a fund we closed early this year. And it's to address a different aspect of climate finance. First one was energy efficiency. This one is more about access to clean finance, because you may know, and I think Pushkala also alluded to it, you have at least more than 1 billion people who don't have access to power grid, mostly in sub-Saharan Africa, but also in Asia Pacific. And I think to figure what it means, you just have to imagine a life where you don't have access to a reliable source of clean energy. You may have to use kerosene for light or kerosene for your energy. And as you can imagine, it has a lot of impact on your ability to conduct a business, on health, and on education of children as well. Still, there are solutions. For individuals, it's all about solar lanterns and solar panels. For small companies, it's more rooftop solar. And that's what we have been trying to address. And here, again, blended finance is very useful because you can create funds, again, with a structure in tranches, each tranche being really suitable for different categories of investors, government, but also DFI, but also foundation, impact funds, family offices, which all have different expectations in terms of risk return. It's really about designing structures that make sense for investors, and government and DFI play a very important role as well to bring catalytic capital and help really start this initiative. Technical assistance is very important as well to speed up the process and really create an ecosystem, if you want. Remaining the question, and maybe we can discuss it here, the next challenge is really how to bring more Asian investors into this space.
How do we bring the investors, the Asian investors? In many cases, investors would say, yes, that is a good idea, but what is the impact? What are the ESG? Where can you show us? Can you actually bring the results? And I just want to maybe refer that to Pei Yuan. Can you describe how do we put the ESG criteria to actually provide this transparency for investors?
We touched two very important and fundamental issues. One is standard or definition, another is long-term investor. It's not just about investor, it's about long-term investor. And also, I think most of the investors still care about market return. So if you ask them whether you care about ESG, then they will ask whether E or S or G or ESG as a whole will create some difference in my financial return. So I think these are two critical points for everybody, for this community. According to the China experience, I think on the standard or definition, it's quite important to make the alignments. And I think maybe some of you already noticed that 2 weeks ago, our central bank announced a new standard for green bond for public consultation. And in this version, actually, the market actually welcomed this new version, even though it's still not the final version. It's a version for public consultation, but the market welcomed this, not just domestic market, but also global market for two reasons. One is that this proposed standard align the two domestic standards. So in the past 5 years on Chinese green bond market, there are two standards. One is standard by central bank. One is standard by the so-called NDRC, China National Development and Reform Commissions. And therefore, you may need to compare to two. So now you can only compare to one. But there's still another standard for green credit. So we still have something to do more, but at least we have a major step. And the global market welcomed the standard because it removed the green use of coal. Because many investors, if they said that we are green investor and we are investing in green bond, and maybe that means to them that we don't want to invest in coal. But in China, according to our energy strategy, we categorize clean use of coal as clean energy. So in this version, we remove green coal. So this actually is also an alignment. So I think for the standard and definition, it's quite important to make the alignment. For the investor's perspective, particularly long-term investor in China, I can see the asset management firms are now showing more interest to ESG, largely because they see some foreign investors are considering these issues when they invest in Chinese A shares. So there are two things quite important. One is how we can bring in more international investors. So this goes back to the standard issues. So that's one. Another is how we can mobilize the domestic investors. We also have pension, we also have insurance assets. But the point is that they are now used to the traditional business model and the investment opportunity, investment projects. And they lack of knowledge on the so-called new projects. And therefore, I think just like Pushkala said, organization like IFC, how they can structure some model. For example, First Lux sharing scheme or structure that can encourage the traditional investor in the market to take a try, to test this new idea. I think it worked. At least it worked in the past 10 years in China for IFC on the energy efficiency project. So I think similar scheme may be useful for ESG investment or climate finance, green finance in general.
Thank you very much. Maybe a takeaway from Yuan comments. The transition requires adaptation to the transition, and structures like a first loss to educate investors could make the change, and until we are actually there to get acquainted with the product and they can take off.
Thank you for listening to this episode on how we can uncover untapped pockets of climate finance. This discussion was adapted from the AVPN Virtual Conference 2020, which brought together more than 7,500 people in the midst of the COVID-19 crisis to discuss the mounting issues facing Asia and how our community of social investors have a critical role to play to catalyze solutions. While navigating through this process can be challenging, we are seeing a growing appetite for green financing with much innovation and opportunities emerging across various Asian markets. If you would like to connect more deeply with the AVPN community, you can reach us. If you would like to connect more deeply with the AVPN community, you can reach out to us at knowledge@avpn.asia to explore opportunities. We would like to thank our lead partners, Chandler Foundation, Stockholm Environment Institute, and Edan Prize Foundation for their continuous support. See you at our next episode, where we will hear perspectives directly from the wealth holders themselves and how they can pivot their investment strategy for impact.